Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see as the gold stock commodities shown some retracement in the recent couple of sessions, some relief on the markets because initially it was a big part of the emotions and the overreacting on the recent events that has happened this week. But in general, we could say that the direction of this reaction mostly is correct and probably will continue within the nearest months. At the same time, by some reasons were actually mentioned already, and if you would like to know more about this now a fundamental view on the market, you could read the report. But within the couple of months, we suggest that gold could show a bit deeper retracement. It's just because that it might seem that inflationary pressure is decreasing in the United States, but this will be the deceiving visuality. Is just because it will be disguised by money inflow from the European Union because, situation stands tough in Europe and many investors are running into the safety, buying United States bonds, investing in the ETFs, in the stock funds, hedge funds. So they're just moving assets out from the European Union. This is the first moment. And second, since the Fed still intends to raise the rates together with the demand on the United States assets, that could lead to some signs of kind of the easing of the inflationary pressure. But by our view, this hardly will hold for too long, probably April, May, maybe in the beginning of the June. So if no escalation happens in Europe, and after that the inflation should start showing itself again. So in two words speaking, we think that whatever scenario happens on the market, it anyway will be supportive to the gold. For instance, if some normalization will be in Europe, then the inflationary pressure and inflationary problems in the United States again will come on the first stage, and we suggest that the nominal interest rates and Fed will be 1-2 steps behind the real inflation. This is first moment. Second moment, we think that inflation has the structural problems, not the fiscal problems, and it can't be just depressed by the rising in the rate. And when it will become the obvious, it will be really big mind shift among the investors. So it means that if even some normalization comes in Europe, this will not make solid impact on the gold market. It's just because the real interest rates remains below the zero or near zero area, which will be supportive for the gold. Alternatively, if more escalation starts in Europe, which is actually stands in favor of the United States, that anyway will support the demand for the safe haven and for the gold as well. So whatever scenario happens, it anyway should be positive for the gold. That's why we do not see any reasons to change our long-term view, and we suggest that gold should keep going higher in the nearest year or even longer. So that's what about the long-term situation. Still, as we said in the beginning of the video, that in the shorter term and within the 1-2 months probably, gold could show a bit deeper retracement by the reasons that we have mentioned. And the technical picture that we see here mostly confirms this idea. It's just because market first of all hits the major targets at 1275 area. This is monthly target, this is a couple of weekly important targets, and a daily XOP that we already talked about last week. As a result, we've got here the huge bearish engulfing pattern. On the weekly chart it looks like big shooting star pattern, and market is oversold on all time frames, even on the monthly chart. Of course, in current situation, market can't just ignore this and need some time to relax needs some time to repair the potential for upward continuation. So it means that the deep retracement is possible. And as you know, usually engulfing pattern takes the shape of some ABCD to the downside on the lower time frames. Currently, we see the pullback that we suggested and were watching on last week. We said keep an eye on the possible touching of the 1959. This will be a great area to consider taking the long position and completion of the butterfly on the lower time frames. So now it has happened. Market starts bounce up. This bounce probably should last a bit longer, somewhere to the 20-30 area. But after that, once it will be completed, we're not exclude the chance that we should get some kind of the ABC top D pattern with a retracement back down to the 19 even or somewhere lower levels. So here is how it approximately could look like. So on hourly chart, that was our butterfly that we discussed with the 1960 lows, 1959, even 1988, 58 actually. So it has been completed. This, but in fact, is also bullish reversal pattern. So if you have missed chance to go long, but you are still considering this, you could focus on the two different patterns. First is the minor hand shoulders that's forming here. So you could try to use it with the stops below these lows, suggesting upward continuation. Or you could wait a bit more and wait for forming of the larger hand and shoulders pattern. When market starts to form right arm around the same 1975, you could try to take the long position with the target around 2027, 2030 as we said. This will complete simultaneously as the momentum trade to the upside, the Brent build actually that we have discussed last week, and complete the retracement back in the body of the engulfing pattern. Later, after that, since we have the engulfing, that should be something of that sort, at least how I suggest that it might happen. This will be AB leg, and then it could start the CD leg down with this action. But the target is, as I said, around 90 even. So that's approximately what could happen on the gold market within the week, maybe 2 weeks. And, well, if, of course, we will not get any surprises on the geopolitical stage. So, here's, guys, by the way, the divergence as well. So you can see here on the MACD indicator. So you could choose what you like more. If you'd like to sell, it makes sense to wait for the 2030 agreement and then consider taking the short position if we will have the corresponding background for that. If you'd like to go long, as I said, watch for one of these patterns that we have discussed. That's what we have from the gold market. Let's keep watching what will happen next week, especially when the Fed will change the rate.